Hey traders, Akil Stokes here. Welcome back to another weekend trading edge video. Lots of consolidation in the market, in part due to the recent US government shutdown, but still some good opportunities to share with you today. By the way, if you want more information on that government shutdown and kind of what has happened and what I think will happen in the future, make sure you check out the most recent episode of the Trading Coach podcast. It's a video version, so you can watch it here on YouTube as well. We're going to start off on the New Zealand dollar, and this is going to be a trader's request type of setup, meaning that this is an opportunity that I have on my radar, but last week I got a few questions asking Akil, can you show us an EMA? Can you show us a MACD? And although I don't personally use them in my trading, I can certainly show you how you can use them to help with your trading opportunities. And that's what we're going to do today. By the way, before I get started, I'm supposed to say all this stuff. Like if you like this video, or if you know you're going to like this video, subscribe. That way you don't miss all the cool stuff I put here on YouTube. And just like the traders for this particular trade, if you have any questions or comments or things that you want me to share, leave it in the comment section below. So we're going to start off with my normal analysis, my four-step process of analyzing a price chart: IPDE, identify, predict, decide, execute. And you'll see that recently the New Zealand dollar has broken and closed below our most recent level of structure support. Identifying a break and close below allows me to predict that price is likely to continue lower. And one of the methods that I use in order to look for continuations lower is called the pullback trade, where I wait for price action to pull back into that previous level of structure support and whatever other level we identify that's going to be relevant. And then we look for the next extension down. In this particular opportunity, we've got a good amount of room to go. I believe we spoke about this before here on the YouTube channel. Now, what's currently happening here, well, actually, let's stop that. There's a cool entry method we'll get to. But let's now put in the moving average and or the EMA. So there are plenty of methods that you can use them where they are kind of the focal point of your trading strategy. But in this example, we're going to talk about using them as support tools. So let's say that you are looking at this and you want confirmation that you should be in a particular direction, in this case, bearish. And maybe your confirmation doesn't come from the break and close below previous structure. Well, one thing that you could do is you can put on a series of EMAs. I don't actually know which ones these are loaded on. Let's see what the settings say. This is the blue one is going to be a 20. The yellow one is going to be less. Let's see what that one is. Oops, sorry about that. The yellow one is going to be an 8. And what you're looking for is confirmation that the lower EMA, the 8 yellow, is below the blue EMA, the higher one. Now, a question I know I'm going to get, so before you start typing that in, is Akil, which EMA should I use? What is the magic number? And my answer is there is no magic number. You can Google all types of stuff on internet land and it will say this is the best, this is the best. The honest truth is there is no best. Me personally, because I'm Fibonacci based when I use EMAs for, strategy development and stuff like that, I tend to use Fibonacci numbers. So if I'm going to use an 8, I may use an 8 and a 13. I may use an 8 and a 21. I may use a 21 and a 34, a 55, just because I like progressing with those numbers. But it honestly doesn't matter. The key with the moving averages is that you're using either a short, medium, and higher time based one, or a short and a high one, and you're looking at the relationship between the two. That's going to be the main thing. And again, in this relationship right here, if you're looking for confirmation, so like a directional filter, what you're looking for is you're looking for your smaller EMA, the yellow one, to cross and be underneath your larger EMA, which is the blue one. And that's going to give you confirmation of that bearish trend if you're using an EMA to establish a bearish trend. Again, I prefer to use price action, but speaking through the eyes of an indicator type person. So that's one way that you can confirm this trend, right? The next one that we got a request for was the MACD, right? The MACD is probably the most popular under the chart indicator out there. When I say under the chart, it's because it is literally under the chart. And there's a lot of different ways you can use the MACDs. You can use them for divergences. You can also use it for a directional filter, very similar to the EMA, because it essentially is an EMA. Now, here's the cool thing, right? I love how the MACD looks. It's got this cool histogram. You can customize the colors. You really look like a trader. But when I used them for a directional filter, again, in building strategies, here's what I do. And you may be a little bit disappointed. I go to my settings tool right here. I go to style. I don't need the histogram. Be gone. I don't need the signal bar. Be gone. All I need is the MACD. I'll thicken this up some. And then all I care about is the 0 line. And this is going to be a pretty simple filter here, right? If price action, or if MACD, excuse me, is below the 0 line, bearish. If it is above the 0 line, bullish. Yeah, there you go. Again, if you're using it for a directional filter, sometimes the simpler method is the best method to use. So now you've got, if we're looking at this as like a CTS type of deal, combined technical score, you've got your directional bias from the break and close below structure. You've got your supportive resources being your EMAs and your MACDs. You got all three things pointing in the same direction, giving you some confirmation of that bearish move. Now, the next question is how you get involved. Well, two ways that we can get involved right here. So price action has pulled back. We've actually pulled back to an EMA, which could be another method of entry as well, but we'll save that for another time. But we've pulled back to an EMA. We've also pulled back to this previous little consolidation zone right there. I don't like that this is black. I was using a white chart for the Trading Coach podcast video. And now we have a doji candle. So what I mean by that is that price action pulled back, we pulled back, and we had this red candle right here, which gave us indecision. You can see a big wick to the upside, testing that level, a rejection, a little wick to the downside, and it closed pretty much in the middle or lower third. So it's a bearish doji candle. We then follow that up, right? Live room members, perfect example of this, with an inside bar. Again, this green bar right here is going to be called an inside bar. There are plenty of videos here on the YouTube channel as well that you can watch if you want to see more about this. I'll link them below. But an inside bar is a bar that completes, completely within the previous bar. So if I look at, I'm going to take this box away just so you guys can see it. If I look at my previous bar, this bearish doji, and I draw a line at the highs, right? And I draw a line at the lows, you can see that it completes completely within that range. And essentially all that means is consolidation. It's a contraction of the range. Now, there is a strategy that you can use with inside bars where what you would do is, and there's different methods of doing this, but the one we'll talk about today is you simply take a sell stop order and you put it at the low, or maybe a pip or so below the low of the current bar, the green one, and you take, I want to change this color so we have different kind of things on here. Here we go. You take a sell stop order, put it at the low of there. You take a buy stop order and you put it at the high of that bar. And the idea is that we're going to see a breakout out of this range. Whichever way we break out is direction that we're likely to go in. Now, my advice whenever we're talking inside bars is that you use a bias inside bar approach. So with this being, with us already having a bearish bias on this trade, we wouldn't necessarily be looking for a move to the upside. We would only be looking to sell if we get that break to the downside. And that could be a very aggressive entry technique. So that's one way to get involved in that. Again, live room members, we spoke about the pros and the cons of that. So just keep that in mind. But that's one way to aggressively get involved in this trade. Another way would be simply waiting for a lower low, lower close. So waiting for another candle to print that gives you both a break and a close below this current green candle. That's a little bit more confirmation of the potential bearish move. And you can certainly use that as an entry reason as well. So still looking for our bearish continuation trade here on New Zealand dollar. Again, we can just real quick talk about some targets and whatnot. Again, our bigger zone is we're looking for a retest of this level down here. We can draw in, some Fibonacci. So take a Fibonacci retracement, extension. Long weekend, had a Hall of Fame dinner yesterday and just finished watching the Spurs Leeds game early this morning. So brain's still not all the way on yet, but we have a Fibonacci extension from swing high to swing low. Right, get on there. There we go. There you can see we're going to have a 127 at 56.80s, 1618 down at 55.94, so right above that 156 even handle. We can take a projected 1-to-1 measure move. So the length of this move, the high to the low. Let's change this back to white because I like that color better. And then we can copy and paste and draw that onto our retracement. If this indeed ends up being the retracement right here, you can see that lines up right at that 1618, excuse me, as well. And again, we always want to adjust a little bit to the even handle number. So right now, 56 even looks like a decent point of confluence if you're looking to take targets. And well, we'll just briefly draw out this risk reward. Again, if you're entering inside bar right here, you can afford to even have a little bit bigger stops above this zone if you want. But you can see really good risk reward, 3-to-1 down to that area. Could be even better, again, if you have more aggressive stops. So keep an eye on this on the New Zealand dollar for the week to come. And for you guys that asked the questions about the EMA and the MACD, I hope this fulfills your desire. If not, let me know and I can do some more in it. Next up, we're heading to the euro dollar. This is going to be a much simpler trade here. I'm going to get rid of my EMAs real quick just to make things a little fresher on the chart. But we've got a simple advanced pattern right here, right? Simple advanced pattern. Yeah, that makes sense. We have a potential cipher pattern. I'm going to draw this out really quickly for you. We have our initial move right here, which is going to be our X to our A. Our first retracement is going to be our A to our B. This extension, right, this AB equals CD pattern right here, this is going to be our B to our C leg. And I'm going to draw a Fibonacci retracement this time from my swing high to my swing low of this setup. And we'll see that if price action can come to our 786, right? So if I go X to A to B again, B to C, C to D, right to our 786 right here, that is going to be the completion point, or at least the minimum completion point for a bearish cipher pattern, which is going to be a selling opportunity. Now, I say minimum completion point because the zone of the cipher starts at the 786, ends at the X leg. So if you're someone that's taking maybe a different alternative reason for entry, instead of entering the trade right at our 786, you can always wait for price action to get into the zone and then wait for your reason for entry. So a little bit of a longer term play here on the euro dollar, but wanted to put it on your radar for the future. Also, for you guys wondering if you want to see this on a lower time frame, you can drop down to a 4-hour as well. It's not as sexy as you get this little big wick, there we go, another oxymoron for you, right up there, but the ratios still do make perfect sense. So certainly valid here on the 4-hour chart as well. Lastly is going to be the Euro New Zealand. If you're new to the channel, you're asking yourself, Akil, why the hell are we looking at the Euro New Zealand? Well, because we've been tracking the Euro New Zealand for like the last 3 weeks or so, and it's gone up like 300 pips and doing exactly what we thought it would do because we are geniuses on this channel every once in a while, right? But the point is there's still a lot of room to go higher on the Euro New Zealand. And as I told you last week or the week before, or probably the week before, this is one of those opportunities where each time we get a fresh break, it's another opportunity to buy. And if you missed the previous opportunity, just wait for that fresh break, wait for that pullback, and there will be more opportunities to buy. And that's exactly what we got here. So we rallied up once again, making new highs, and now we're starting to get a little bit of relief, right? You can see we had lots of green candles going up. Now we have lots of red candles going down, giving us a little bit of relief. Identify the level that you're looking for price to go to. Wait for price action to pull back into that level. And just like we did in all the previous opportunities, wait for that next opportunity to buy up again. There's still lots of room to go higher. There's a white line there that we can adjust a little bit, but you can see there is plenty of room to go higher here on the Euro New Zealand. So don't be late to the trade. Don't enter at the very highs, right? If you miss it, wait for price to exhaust itself. Wait for a little bit of relief in a pullback, wait for your reason for entry, and then look to buy it up. Hope you enjoyed the video. I don't mention this enough, but I am a trading coach. If you're ever interested in getting trained by myself and Jason Greystone and a great community of traders, head over to www.tier1trading.com. Take the 14-day risk-free trial membership. That way you can get on the platform, you can take some courses, hop in some live sessions, and make sure we're the right fit before making any type of commitment. Also, check out this awesome video I did. It was a podcast interview called Your Trading Problems Are in Your Brain. I do a lot of podcast interviews, but this was a really fun one. And I did end up learning something about myself that I never knew about myself before, which is pretty interesting. I'll link that in the description box below. Hope you guys have a great weekend. Do all the things I told you to do earlier about liking and subscribing and watching the shorts page. And until next time, plan your trades, trade your plan. Take care. Up the toffees.